right, Luke, let's get started. It's always interesting how certain companies have like 50 people on a space and some have like 10 people. It's interesting because with Newcore, which is NCAU on the TSX-V, it's actually one of the best performing stocks on the venture in the last 12 months. I looked it up last night. I think it's top 10. And even in the last 2 months, it's up almost 100%. You think there would be a bigger retail following for the company, but something's working. So we're going to talk to Luke about what's working. Let me just set the foundation for the conversation, and I'll let Luke do most of the talking. Newcore put out a PA in 2024 that got my attention. I think it was in mid 2024. And that's really when I started following the company. That's when I bought shares. And then in January, Newcore put out two news releases of drill results from their gold project in Ghana. The first one was about a gram of 96 meters of about a gram. And the second one was 1.85 grams per ton over 62 meters. And these are near surface gold intervals. So in theory, this deposit could be open pit. And the PEA sort of laid that out. And so the combination of the economics that was demonstrated in the PEA and the recent momentum in the drill program has definitely made a difference for Newcore's share price. And we're going to get into that today with Luke. So Luke, how are you today and what's working for Newcore?
Yeah, I'm doing great, Rob, and thanks for having me on. I guess I'd make a few comments based on your intro. I guess one is we also trade in the U.S. NCAUF, and that's something that I've been watching pretty closely over the last few weeks. If you look at the volume and the uptick in volume in the U.S. Trading over the last month, it's been significant. So I think a lot of things that we are doing from a marketing perspective, making sure that, investors are aware of the company and all the good things that we're doing, has been reflected in the volume that we've seen in the US as well as in Canada. So that's been very encouraging from a trading perspective, which I think is kind of how you started off the intro. And then, yeah, obviously in 2024, we put out a PEA that outlined extremely robust economics. We did have a re-rate on the back of that PEA. I think, the market kind of stood up and took notice of the fundamental undervalue of the stock relative to the value of the project. Let's say at a 23.50 gold price, which is obviously today well below where gold is trading at all-time highs of above 3,000. At a 2,350 gold price, you're looking at an after-tax NPV of 632 million, after-tax IRR of 92%, and just over a 1-year payback. So those are extremely attractive economics. And, the market kind of realized that the stock was undervalued relative to the value of the project. So we saw a re-rate in 2024. If you follow us on social media and some of the press releases that we put out, you'll see that we also were part of the TSX-Venture 50, so one of the top 50 performing companies on the TSX-Venture in 2024, and we're ultimately looking to replicate that again in 2025 with a lot of the work that we're currently doing. So we had that nice fundamental re-rate in 2024. We also had some significant proceeds come in, about $3.6 million from warrants, which we had issued in mid 2023. That money allowed us to then kick off a drill program, which commenced in Q3 of last year, and we've had some great results with that initial 10,000 meters of drilling that we've completed. We actually had our highest grade with intercept ever on the project, 204 grams over a meter. Within that same press release, we had 3.4 grams over 28 meters. So very nice intercepts. Those were out in Q4 of last year, and then follow on, and the release and the results that you're mentioning were one of the key catalysts to that led to us raising some additional capital and ultimately expanding our drill program. That intercept that we put out on January 30th of 1.85 grams over 62 meters, basically from surface, 1 meter below surface. Within that, some very nice high grades as well of 8.4 grams over 10 meters. And then at the bottom of the hole, another 68 meters at 3/4 of a gram per ton. On the back of us putting that release out, if you go back and look at the trading, you'll see that we were up about 14% on the day on the back of significant volume. That's the first time that we've seen in the last couple of years a real hand to wallet reaction on the back of good drill results. We took that as a very positive sign that the market is starting to actually reward Newcore for good exploration results, which again we hadn't seen in a couple of years. So on the back of that, we went out and raised some money, and maybe I'll just pause there, Rob, because I could just keep going. But if you want to talk about the financing and some of that stuff, we can talk about that as well. But yeah, as you highlighted, great results that we've been putting out, and we're going to be extremely busy from a drilling perspective through 2025. And yeah, so we're very pleased with that.
Yeah, so you raised $15 million, and obviously the main point of that raise is to expand the drill program. So let's talk about the drill program and what you're finding. So basically, the project has it's a very extensive strike extent shear zone with multiple gold deposits along it. Which areas is the drilling focused on right now? And what can you tell us about the progress?
Yeah, so if we kind of look at it from a high level perspective, we talked a little bit about the PEA and the fundamental underpinning of value that Newcore has as a result of the tremendous economics that PEA highlighted to the market. We're now taking that from PEA to PFS, and we see a significant re-rate by moving the project through that de-risking phase. Now, from an exploration perspective, we've got that layered on top of that kind of fundamental value that the company has. We talk about district scale exploration at our Enchi project, and a few of the reasons for that. One is it's a very large land package, so 248 square kilometers in size. Secondly, if you look at where the mineralization sits along the Bibiani belt, including the Chirano mine to the north of us at 5.5 million ounce endowment, Bibiani to the north of that at 6.5 million, and Newmont's Ahafo mine sitting at 20 million ounces. Where the mineralization typically sits is you get these second and third order splays or shears coming off of the main Bibiani structure. If you add up the total strike length of all of those structures going through our project, which is what you were referring to, you've got about 100 kilometers or 60 miles of strike length going through our property. So we've got lots of targets to ultimately chase. Thus far, we've identified about 25 targets across the project. We've only drilled on 9 of them to date, and 5 of them make up our current resource. In terms of the initial 10,000 meter drill program that we commenced in Q3 of last year, that drilling was focused on a lot of resource conversion as well as some resource expansion. That's one of the key elements for us to take it from a PEA to a PFS, is converting some additional ounces from the inferred to the indicated category. With this expanded drill program from 10,000 to 35,000 meters, a big portion of that will be focused on resource expansion. So all of our deposits, or 5 resource areas, all remain open along strike. So systematically stepping out and looking to continue to add near surface ounces, which would ultimately then feed into a longer life of mine. That's something that we will focus on. We've then got previously drill tested areas. These are areas where we may have put 2,000 to 5,000 meters into them, made discoveries, but didn't have enough drilling completed to wrap a resource around those areas. So going back to those areas is something that we'll look at doing. And then one of the things we're probably most excited about is the opportunity below the kind of existing pits that we outlined within our resource and PEA. If you look at those pits, they currently average about 75 meters. And when you compare that to other deposits along the Sefwi-Bibiani belt from to the north of us, where this mineralization can really start to increase in grade and extend at depth is once you find these high grade feeder zones, or the plumbing system that some people will refer to it as. We've started to identify a number of those areas on our project, and we want to get back into those areas, do additional drilling to ultimately prove up that there's a much larger high-grade opportunity that sits below all of these pits that we've outlined already on the project. So when we talk about district scale, that's ultimately what we're talking about is all of those different opportunities that we've got from an exploration perspective. And obviously the treasury that we've got today allowed us to expand to 35,000 meters. And then, we would expect to expand well beyond that as we continue to drill in 2025.
So the pits that are part of the PEA are Boin and Niam, and is it Sewum?
Yep, correct. So Sewum is our largest. Sewum, yep. So Sewum is our largest deposit, followed by Boin, Niam, and Niam, Quachikrum, and Tokasea. Boin and Sewum make up about 85-90% of the material that feeds our PEA. So, they're definitely the largest resources on our project today. And, the heap leach, or the proposed heap leach facility, sits right in between those two deposits.
Okay. So right now the rigs are at Boin?
Correct. Yep. So they've been moving around. So we've been doing some drilling at Sewum. And what we'll often do is, we'll drill 10 or 20 holes at one of our deposits. We'll get the results back from those holes. While those results are at the assay lab, we'll move the rig, let's say, to Boin, do 10 or 20 holes there. We then get the results back from Sewum. That gives us some additional information that we can leverage off of to then go back to Sewum. So we'll move the rig around based on obviously the results that we're getting as we're drilling on the project. But yes, right now, today, the rig is drilling at Boin, but it's been moving from Boin, Sewum, and Niam has been the focus.
So to put some context on this, so like at Boin in the presentation, you have multiple section maps showing the drilling to date, and basically you have these steeply plunging chutes that start at surface and extend to depth, and we don't even know how far they extend to depth because you haven't drilled. that deep. And you've had some really nice intervals, like 3.36 grams per ton over 28 meters and 204 grams per ton over 1 meter, 1.96 grams per ton over more than 60 meters. And that's all at Boin. Can you just explain a little bit in terms of at Boyne, for example, are there multiple shoots in this one area, or are you drilling just one or two shoots that are very extensive?
Yeah, so there's a a number of parallel structures that run through Boeing, and then obviously, chasing those structures to depth is something that we'll do. So, as we make near surface discoveries, we'll then step back and drill deeper and continue to ultimately chase those structures to depth. So, some of those results that you just highlighted there, obviously 204 grams over a meter and 3.4 grams over 28 meters. Those are well above the average grades that we're seeing on our project. So that obviously really benefits the project in terms of, being able to convert ounces and ultimately, hopefully see some higher grades as well. Couple of those other results that you mentioned, I think you mentioned hole number 294, which was 0.94 grams over 54 meters, ending in 2 grams over 11 meters, as well as hole 288, 1.96 over 62 meters, ending in 2.23 over 28 meters. Those two holes there, 288 and 294, if your listeners go to our website and look at our 3D model, you'll see that those holes we pushed well beyond the current pit limits. So obviously in our 2023 resource and then in our 2024 PEA, we had pits that constrained our resource. And one of the things that we've been doing with this drilling is where there's an opportunity to extend the holes beyond the current pit, the pit walls. We've been doing that, and those two holes there are good examples of that, where we think we'll be able to ultimately grow the overall size of the resource by extending the mineralized footprint beyond those existing pit walls. I think it's also important to highlight that if you look at the gold price that we used for the resource, or the last resource, we used 1650 for the pits that constrain the resource. If you're looking today at prices that companies are using for their resources, needless to say, it's well above those levels, given where gold is trading today. So we also see an opportunity to potentially expand expand the pits by using a different gold price in the future. But those are all things that we kind of work on internally, and then as we move towards that PFS, we'll look to get all of that work incorporated into a full 43101 compliant study.
It's interesting when you contrast the share price chart from 2024, and you had the bump on the PEA, and then it kind of went into a sideways range for the next 6-7 months. But January, when you started to announce the results of the drilling, and people saw the grades were increasing, it shot skyward. So I guess my question is, the trend in the results is favorable. The last 3 or 4 sets of holes that you've announced, the grades are strong and averaging above a gram, and that's much better than the grade in the PEA of an average grade of 0.6 grams. So can you keep this up, Luke? Can you keep putting out these great results?
Yeah, I mean, I think a couple things. One from a from a drilling perspective, and you talk about bumps and share prices and some of the move that we've been having. You know, Probably when we spoke last on your show, and I know when we've kind of chatted in the past, one of the things that we've kind of always highlighted is that Newcore never stopped working. So if you look over the last few years, it's obviously been a difficult market for, exploration development stage companies. And, just coming back from PDAC a couple weeks ago, it still remains a difficult market for a lot of exploration development stage companies, and investors are being very selective. And obviously, Newcore is one of the companies that's been identified as a real winner. But over that, last kind of 2 or 3 year period where it's been very difficult, we've never stopped working. And we've always talked about, when the market starts to come back and we start to see some positive momentum in the broader, market and for exploration development stage companies, Newcore should be one of the companies that will re-rate the quickest. And that's really because all of that work that we've done over the last 2 or 3 years starts to get reflected into the share price as the market starts to pay attention again. And I think the PEA was a prime example of that. People weren't paying attention and had kind of moved on to other sectors and AI and focused on other opportunities in the broader market. And, we continued to keep our heads down, and we put out a phenomenal PEA, which, all of a sudden the market woke up and took notice. Now we're drilling. And I think that similar pattern is happening where we're ultimately putting good drill results out, and the market is standing up and ultimately taking notice. I think the other thing, and we've touched on it a little, is the fact that we're very well capitalized at this stage. We went out to raise $12 million at the beginning of February. That was on the back of a very successful conference that we had in Cape Town at the annual Indaba mining conference. We then stopped in New York and caught up with a few very large institutional investors who we've been talking to for a number of years. They were very keen to get involved in the company and become shareholders. That led to us launching a $12 million financing, which was then very quickly oversubscribed. So we increased it from $12 to $15 million. So we didn't have to cut investors back too much. And that obviously removed any funding or potential perceived funding overhang from the market. If you then look at, the securities and options that are currently and warrants that are currently in the money, Newcore today has over $30 million of cash and cash equivalents with those, various options and warrants that are in the money. So that positions the company to aggressively move the project forward, and we will have a huge amount of news flow over the next year as we continue to drill on the project. So that then creates a catalyst-rich company that ultimately is going to have news flow to hopefully propel the stock higher. And then obviously in the first half of next year, with the PFS that we're working towards getting completed, we see that as another potential step change type milestone for the company, similar to that step change that we saw with the PEA that we released in 2024. So we couldn't be more excited about the outlook for the company at this stage.
It's a topic that's been on my mind and a lot of investors' minds lately is leverage to a rising gold price. So, there's another thing that we can observe. In January, the gold price was around 2,650 or 2,700, and this morning it's above 3,000 an ounce. What does that mean to your company in terms of the leverage to the gold price and the economics of the ore bodies?
Yeah, that's a great question, and I think it's also one of the reasons why we've seen good share performance for Newcore over the last few months. One really simple way of ultimately looking at it, and I would point investors to kind of around slide 15 of our presentation. There's a PEA leverage to the gold price slide in there. And this really highlights the point that the question that you're ultimately asking. So a real simple way of looking at it is for every $100 move in the gold price, we add roughly after tax US $50 million to the NPV of the project. So at 1850 gold, the project has a $371 million after tax NPV, 58% IRR, and a 1.6 year payback. If we increase that by $100, we're adding $50 million to the NPV, takes it to 423, 475 at 2050. Once we get to 2350 gold, you're looking at $632 million of after-tax NPV, 92% IRR, and a 1.1 year payback. If you look at today's gold price of $3,000, that would be around $1 billion after-tax NPV. So the numbers are just spectacular, and that compares to a market cap today of roughly US $90 million. So at today's gold price, you're looking at around $1 billion after-tax NPV for the project, relative to a roughly, call it $90 million US market cap. So we see tremendous leverage to the gold price for investors, and I think that's again one of the reasons we've seen the stock perform well in this rising gold price environment.
And I guess a final question from me, and then if anybody in the audience has a question, please ask to speak, and I'll call on you. What kind of interest are you receiving from larger investors, like who may have participated in the latest financing, and even corporates? Are you having conversations with corporates who are active in Ghana?
Yeah, so I think from an investor perspective, I think it's important to highlight, which I don't think I've highlighted yet on this call. Management and board, we own 15%, 15% of Newcore. That's money that we've invested alongside shareholders over the last number of years. So reason I highlight that is that we are truly aligned with shareholders, and we're here to create tremendous value for shareholders. And us being 15% obviously means we're very well aligned from that perspective. From a institutional shareholder perspective, which I think was the first part of your question, if you look at the last financing, that'd be a great example of the institutional interest that there is for Newcore, and I think that's driven by the fact that a number of institutional investors recognize that the market cap of the company is today not reflecting the value of the project. So if you look at our last financing, it was about 90% taken up by institutional investors. Again, a couple of very large, long-only New York-based investors were the lead orders for that financing. We then had a tremendous amount of support from our existing institutional shareholders, along with a few others. And that led to the upsized in the financing, and it took our institutional ownership from 45% to roughly 55% institutionally owned. So it's very rare that you find a company of our size that has such tremendous support from mining focused institutional investors. But again, I think that speaks to the quality of the asset and the team that's pushing it forward. From a corporate perspective, what we always highlight is, again, we're major shareholders of the business. We will engage in conversations with anybody who potentially expresses interest, and we keep those lines of communication open. One of the things and one of the motivations for us to take the project from a PEA to PFS and then ultimately towards a construction decision is that as you move the project along that path, that typically, de-risks it further for, shareholders as well as potential acquirers of the project or the company. one of the great things about Newcore is the fact that, we don't need that to be the eventuality for the company. We don't need someone to come in and buy Newcore. If someone were to come along and put an offer on the table that, we thought was what was fair, then our job is to ultimately take that to shareholders. But when you look at the capex that's required for this project, you're looking at about 106 million is what we outlined in the PEA. So 106 million of capex with the institutional support that we have, that's a project that's very buildable. It's a simple open pit heap leach project with tremendous economics. So we can ultimately fund and build this project ourselves. We're not looking at a billion-dollar project in the middle of nowhere where you really need a mid-cap or major to come in and move that kind of a project forward. This is a project that we can take into production ourselves. But obviously, as we move towards that, if someone comes along and wants to disrupt that by putting an offer on the table, then, our fiduciary duty is to our shareholders and to take that to them at that stage. So yeah, that's kind of philosophically how we approach, M&A and potential interest.
I'm going to throw one more at you just while we're here. I know you're going to say we don't need to find a single, one more ounce of gold. We have enough right now to be highly economic with great numbers, but you're still drilling and you're finding more gold, so it's going to get bigger. So just kind of interested to see how you answer this question, Luke. How big is big enough to build it and press the button and say, hey, we're going to build this? Like, what's the mark in terms of scale that you say, let's go?
Well, that's what we're doing right now. So the reason we're taking it from PEA to PFS is because all the economics that we've talked about are driven off of the resource that we have today. So, that comment about we don't need to find another ounce of gold, that's because, the economics are driven by the resource that we have today. And when I say not find another ounce of gold, obviously infill drilling, that's finding additional. But when you look at, the total of 1.3 million ounces, which is what fed our PEA, and then we have additional resource, that didn't go into the PEA that sits outside of that. But the 1.3 that specifically fed the PEA, is what drove all of the economics for this project. So, we see that as an opportunity, again, to de-risk it, take it to a PFS, and that can lead to a fundamental re-rating of the share price and the market cap of the company based on us taking it through that path. I would then argue that you get all of the additional, district scale exploration for free. And that's the kind of point, is you've got this very buildable project that without finding any more gold, and again, we've got to convert ounces, but let's say not find more, is an opportunity to significantly re-rate the stock and the company. And then layered on top of that, you get district scale exploration for free. We will continue to aggressively explore on this project. And don't get me wrong, that's a big focus for us. And with this expanded drill program, that's going to be a big part of that focus, is adding more ounces, targeting new areas, drilling at depth. All of that then can create even more outsized return for shareholders. But fundamentally, there's a significant re-rate without finding one more ounce. And then you get all of that exploration upside for free, is the way I personally look at it and my view.
Yeah, it's a compelling story. Thank you, Luke. I really appreciate your time this afternoon. This recording will be up on my YouTube channel at Goldfinger Capital in the next couple of days. Thank you. Cheers.
Yeah, thanks a lot, Rob.
Thanks for tuning in, everyone. Thank you.
Bye.